The cryptocurrency market has seen an absolutely brutal correction, resulting in $76 billion being wiped off the total cryptocurrency market cap within 24 hours. In today's video, we're going to be discussing the smaller time frame price action, the upcoming news events, the daily and weekly trend, what impact this correction has had on those events, and of course, the macro charts. Let's go ahead and jump in. Okay, welcome back to the channel. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin on the smaller time frame price action, the macro charts, the daily and weekly trend. In today's video, we're going to be reviewing the 4-year cycle. Could we see new lows? When will the bull run start? We'll also be talking about the upcoming news events and the price action moving between now and then, as well as discussing the weekly and daily trends and the next moves of Bitcoin. Before you get into it, smash the like button, hit the comment button, and subscribe to the channel. Let's try to get today's video to 250 likes. Of course, all of our videos, we focus on the facts, the data, the technical information, the structural information, the news events, and the economy. No hype, no BS, no emotion, pure raw TA. If that's the kind of content you're interested in, you can join us on Telegram. That is going to be the second link down below. You'll get access to charts, updates, analysis, educational posts, news events, information, and so much more to keep you in the loop with not only Bitcoin, with not only the economy, but cryptocurrency as a whole. If you're interested in joining our VIP channel, where we have exact trading signals with exact entries, exact stop losses, exact targets. You can see, for example, here, ADA, we had a short. Here is our short. Here are our entries, our targets. You can see all targets reached. All targets reached for our AAVE short. All targets reached for our Ethereum short. All targets reached for our Bitcoin short. All targets reached for our other Bitcoin short. We have had absolutely massive profits in here, guys. Go ahead and contact me to join. You'll also get access to our group chat. We have all of our members posting additional trades. We have a help chat, we have a general chat, we have an altcoin analysis chat, and of course, we post all of our additional videos in here. For more information of how to join, go over to the free channel, click the links up the top. You'll find more access on this one over here. Let's go ahead, guys, and get stuck into the video, as there is a bunch to talk about. And as you can see, the 24-hour volume is up 112%. Of course, as we see a lot of liquidity, as we see a lot of volatility, we do see volume, okay? So $108 billion, up 112%. Liquidations are up 359% for the last 24 hours. This is up to $382 million in liquidations. And as for the month of June, we are currently down 3.27%. Looking at the volatility index, if we go ahead and refresh the page really quickly, we can see the volatility index did take a nice move toward the upside on the 30. And of course, we can see a similar thing has occurred on the 60. A nice little move towards the upside. Again, as volatility increases, we expect more volume to enter the market, and we expect the price to act more sporadically in greater or larger percentage moves. Moving on from there, guys, taking a look at liquidation data, we can see within the 24-hour period, the vast majority, over 10% of the, well, just under 10% of the liquidations were shorts, and the majority were in these long positions. So longs truly did get slaughtered in that correction. But again, you could have seen all of that coming if you were paying attention to our charts, particularly our short-term ranges on this chart that we've been discussing for weeks. We'll come back and get into it. The DXY has got an interesting week ahead, as we do have numerous economic events coming up. We have got our CPI, we have got our PPI, and we have got the interest rate decision. Remember, PPI is leading for CPI, CPI is leading for interest rates, and interest rates directly determine the risk in the market, and depending on what the interest rates do, we can see a shift in overall direction for the markets, and thus the DXY. So if the DXY does go up, we can see the stock market and crypto correct even further. If the DXY does go down, we can expect those asset prices to climb upwards. Determining whether it's going to go up or down is going to be heavily relied upon by the economic news. If interest rates come out bearish, meaning they've gone to 0.25 or they've gone up to 0.5, and the announcement is that they have no intention of dropping these down to a pivot, or the announcement could be they're more likely to aggressively increase further into the future than expected, we can expect a negative reaction in the market. If CPI and PPI come out neutral / bearish, meaning they're not quite falling, they're still up, but they're lower than last month's data, the expectation for the market move is going to occur when the interest rates actually occur. So the main event is going to be interest rates. Watch what happens there. Looking at the DXY from a structural and technical level, we have our downtrending resistance here. If broken above, that could send us upwards to retest 106 to 105. Of course, this move being incredibly bearish in the market, we have our uptrending support represented by this black line over here. If we lose this level here, we expect a correction downwards. Whatever happens, this week is going to be the deciding week for where the DXY goes, and it's going to be a very important week at determining overall market risk. Let's move on, guys. S&P 500. You can see it has broken upwards from our major resistance zone, still in a rising channel. However, we do need to invalidate this rising channel for the price to continue upwards. Again, not really too concerned on any of these movements of these assets yet. We're waiting for the interest rates to shift the market, because regardless of what they say right now, the interest rates come out very bearish or very positive, it's going to drastically impact the way these assets move into the next period or next few weeks. Moving on, guys, to the Dow Jones, you can see a very similar thing here. We do have our uptrending resistance, support over here. We didn't fail. We didn't manage to break a weekly candle below, meaning it is still currently support, and support is support until it's not. We have our horizontal resistance here. A break over this level will be bullish. A weekly close below this level will be bearish. Let's go ahead, guys, and jump into Bitcoin next. So, for those of you who have been following the channel, you would know that we sold our Bitcoin all the way back at 30,000. Right over here, we were calling it on Twitter. We were telling people everyone's getting overly bullish at $28,000 to $30,000. I said I'm going bearish at $30,000. In fact, I sold all my Bitcoin on the 14th of April, as per this post over here. Sold all my Bitcoin at 30,000 on the 14th, which actually marked the exact top. So if you've been following that post, if you bought Bitcoin when we bought it, which was all the way down to 16.5 and 18,000 back over here, okay, and you sold it at 30,000 where we did, you've done really, really good. But I'm going to go ahead and say I'm not interested in giving long-term predictions on this channel much more. I'm not going to be advising people when to buy or what to buy. I'm going to give you the information and you can make your decision up for yourself. Personally, I am not an investor. A lot of people watch this channel are probably investors. Therefore, you have to understand that the price of the asset really doesn't mean too much for me. I don't care if I buy Bitcoin at 30,000 or 10,000 or 50,000, because I have no intention of holding it for the long term. What I care about is the percentage change between when I buy and when I sell. So I look for situations in which I have the strength on my side, I have the probabilities on my side, and I have an adequate risk return for my trade to execute. In my eyes right now, I'd be looking at a monthly candle close of about 30,000 before I consider another high time frame weekly to monthly long swing trade for Bitcoin. Additionally, we can look for lower levels, but as I've said to my private members, and I'm going to say over here, if I'm taking a long-term position, considering the current economic climate, I'd rather purchase from a position of strength and sacrifice a few percent than purchase from a position of weakness and have a lower probability of success. Since we did take a massive trade over here, made around 90% profit, we can sacrifice a few of those percentage points of profit to rebuy or enter a new trade higher up with more confidence, then forfeit those pieces, those dollars, those profits at trying to catch a falling knife or trying to catch a reversal that may or may not happen as of yet. So although we're going to go over everything today and discuss what's happening, we do have to consider when we look at the macro scale of things, there's more to consider than just the charts. Because remember, the price action moves based on economic drivers, and economic drivers being inflation, interest rates are currently starting to shift. And if we do start to see that environment, which interest rates start going back up again, inflation start going back again, it would be unrealistic to assume Bitcoin is going to start rallying as well. And therefore, buying now for a long term is not the best option in terms of your overall risk. There are better positions to be buying long term. Not talking about price, I'm talking about overall market risk. Let's go ahead, guys, and get stuck into it. We'll go ahead and start off on Bitcoin with the daily chart. I wanted to briefly interrupt today's video to discuss my favorite exchange, BitGet. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than BitGet. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, BitGet is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. BitGet also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, BitGet offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to BitGet. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So as you can see, we have seen a brutal correction in the last 24 hours. Now for Bitcoin, it wasn't too bad, right? Bitcoin dropped 3 or 4%, but for the total cryptocurrency market cap, that is when the blood came. We saw total cryptocurrency market cap actually drop around 7%, wiping off $76 or $78 billion on the total cryptocurrency market cap in total, temporarily pushing it under the $1 trillion mark. And this was actually a brutal correction, guys, not because of the percentage, although that was large, because of the trend line in which we actually lost. If you see over here, we have an overall uptrend for the total cryptocurrency market cap right over here, and we've actually dropped below that uptrend as per that prior daily candle. So this means we are now officially in a downtrend for the total cryptocurrency market cap. Now we have been in a downtrend on the daily chart for quite some time, but what this suggests, it suggests that this weekly uptrend, okay, that we have been in has now been lost. So for the total cryptocurrency market cap, we've been in a daily downtrend, and now we are actually in a weekly downtrend. So it's not looking very good. We'll convert that back to Bitcoin in just a moment. So coming back to Bitcoin, we can see the key levels are still very much in play. If you've been following this chart, you know exactly what is going on. You'll be up to date with the price action. Nothing will be confusing you. Remember, we are bearish at the moment on the daily chart, okay, until we get above the daily trending resistance. A daily downtrending resistance, we are underneath this black line, therefore we are weak bearish. We are currently weekly bullish, but we are currently losing the weekly uptrend. We'll discuss that in just a moment. As of right now, guys, like I've been saying for weeks, the daily trend is bearish while we remain underneath this downtrend and while the momentum remains negative. For the daily uptrend to resume, for the bulls to take control of the daily trend, we need to see the price break above this downtrending resistance and the RSI bust through this downtrending resistance to signify a momentum shift. Now, you're probably thinking, what the hell is a momentum shift? Well, a momentum shift is a representation of a shift in the metrics of price action. Now, remember, charts, candles, market structures, liquidity zones, they're all visual representations of metrics. The price moves on metrics. You have to understand the deeper meaning of TA. Metrics being volume, okay? Velocity, liquidity, speed, volatility, these metrics of price action. Momentum being a leading indicator for these metrics being descriptive of what the strength of price action is doing. Therefore, if you want to see changes in the strength of price action, we can actually look to see shifts in momentum, where we have a shift from negative to weak negative to strong negative, from positive to negative, from strong positive to weakening positive. We can look for these shifts in momentum to infer potential shifts in price action. And then we apply structural analysis with liquidity zones to identify the trends and then apply probabilities to those trends to infer possible outcomes of direction. And that is what we've done here. We've said, from the start, a daily downtrend, we are weak bearish. This is our outcome, our weak bearish. The probability is that we go down until the daily trend is broken. Because when the daily trend is broken upwards, the probability is now a shift in favor of the weekly bullish trend moving back upwards. So as of right now, guys, the daily trend is bearish. Expect the price to go towards the next liquidity zone, which is 25.2 to 24.4, represented by the weekly uptrending support. 25.2 to 24.4, represented by the weekly trend support. Right over here, this is a 300-day long support. So that is what the bulls need to do to take control. If they are unable to hold the 24.4 to 25.2K level, we are going to see the weekly trend lost. The weekly trend will be lost. We'll be moving from a weak bearish into a weekly bearish trend. If we move into a weekly bearish trend, as we have just done on the total cryptocurrency market cap, that could bring Bitcoin much lower between this range, guys. That is a scary thought. So let's take a look at the weekly chart. Has the weekly trend been lost? From a technical level, the weekly trend is being lost, but it has not been lost yet. We have 20 hours left on this candle. As you can see, the candle is currently sitting underneath the 200-day moving average on the weekly chart. This is a critical point that signifies a shift in strength of the price action. This strength shift has been identifiable on the daily chart for a very long time. As you can see on the daily chart, we've had this bearish divergence. Okay, we had rising price action right over here, represented red line, and falling momentum. We have seen that weakness display on the chart, and it continued from this point over here where we actually flipped the trend downwards. The weakness has been displayed for a long time. For the people saying, oh, we couldn't see this weakness coming, absolutely we saw it coming. It's been right in front of our faces. So going back to a weekly chart, this is a representation of now a shift. It shows the weakness has developed to a great enough extent on the weekly chart to now break below the 200-day moving average. A close below the 200-day moving average will represent a shift of strength negative. Right now, we are in a weekly uptrend because we sit above 25.2 to 24.4. That remains intact. That is a structural support. Okay, there's an area of support, there's an area of liquidity. So what we had, to sum it up, we had an uptrend on the weekly chart when we broke above 25.2. We hit a top point, which was a $30,000 resistance. Okay. We hit bearish divergence, we had weakness in the chart, we've been in a daily downtrend ever since. We have now seen a crossover on the weekly. This suggests weakness in the weekly uptrend. The weekly uptrend has now shifted from strong to weak. It has shifted from positive to negative, but the trend itself is intact until 24.4K is lost. And therefore we could see a move on the weekly chart to retest 24.4K. That could act as a bounce point before a continuation upwards once more. That is something we have to consider. We'll talk about on a smaller time frame when we get into it, and we'll talk about exactly what we need to see on a smaller time frame to get to see any of that kind of stuff. But just keep in mind, if we lose 24.4K, the weekly trend is lost, the price is going to go lower. So let's talk about the 4-year cycle. Let's talk about the bear market. Let's talk about the bull market. Let's talk about where the price can go and exactly the probabilities of seeing new lows. Because now, since we have dropped, all the perma bears in the world are going to come out and say, I told you I was right, told you I was right, I was telling you we were going to go down to bloody $4,000, even though they missed the 50-60% rally from 16,000. All the perma bulls are telling you we're in a bull market, we're in a bull market, we're in a bull market. Ever since we crossed 30,000, once again, everyone is freaking wrong. The charts are right. Don't listen to people, trust the charts, trust the data. Even if people are right, the probabilities remain in favor of the charts in a long term. If you trust the charts over the long term, you're not going to be right every time, but over a long period of time, you're going to be more right than wrong. And that is the fact. So what is a chart saying? Well, the chart is saying that we had a nice move upwards from 16,000 or wherever it was, 15,500. We saw a bunch of green candles, and then we saw this red candle as a rejection and a bearish engulfing candle. This suggested that the strength of the monthly chart has been shifted from positive to negative, and we have seen now a potential reversal develop. Again, this reversal will continue below 24.4K, but for the uptrend to resume on Bitcoin, not only do we need to see a daily chart turn bullish and the weekly chart become stronger again, and for the weekly chart to become stronger again, we need to see a daily chart become bullish. For daily chart to become bullish, we need to see the price break over the daily downtrend resistance and the momentum to break upwards as described. But for the monthly chart to become bullish, we need to see a monthly candle close above $30,000. The reason being, if we look at prior cycles, in particular, the solid horizontal trend lines, every time we see a monthly candle close above that level, we end up moving upwards to retest, okay, the high point of the dead cat bounce after the bull run top. Bull run top, dead cat bounce, correction. Bull run top, dead cat bounce, correction. Bull run top, dead cat bounce, correction. The dotted trend line. You can see without a doubt, every time we close a monthly candle above, we move upwards toward the dotted trend line. Okay, so does that justify a bull run? No, but it is one key piece of information. We need to break above that point to see that occur, to see the macro uptrend occur. Until we get that, we are not in a macro uptrend, we are not in a monthly uptrend. All we have seen, like I've been saying for months, is a nice, strong reversal for Bitcoin. We have seen a rejection now. Will that rejection continue into a macro downtrend? Unlikely unless we see two things. We'll go over those two things. Number one, are new lows possible? Here we go. Number one, what we need to see is the weekly trend lost. So we need to see the price drop below 24.4. That is essential. Number two, we need to see the price transition from a bearish to a macro bearish trend, meaning 20 to 18.3K is lost. Now, this level is not going to be lost via natural price action, meaning if nothing occurs on a chart, the risk in the market doesn't change, this will not be lost. So for this to be lost and us to enter a macro downtrend, which will take us to new lows, we need to see a shift in the systematic risk in the market. Meaning we need to see the trajectory or the predicted expected trajectory of the systematic risk and interest rates shift over a period of time. If we go to this chart over here, and excuse all the drawings, which will explain it in a different video, we have interest rates and we have inflation. Now, as we know, inflation determines what the interest rates are going to be in future periods, as interest rates are a tool to counteract inflation, right? When you print more money, the money costs less. So how do you make the money more valuable again? Well, you have to repay the debt, okay? You bring money back, you pay off that money, you inflate, increase interest rates, which again increases the cost of debt and therefore stabilizes the inflation or brings inflation down. We have seen that over a period of time. We saw inflation rise, okay, awesome. We saw interest rates rise, the red line. We saw inflation drop because interest rates were rising, and then we saw interest rates drop because inflation was rising. Now we have seen a situation where inflation in the last month is up 0.4%, and all our indicators are leading that inflation is rising. So it's going to be very interesting to see what happens to the interest rates, because the markets have rallied based on this. The dotted area is the trajectory of the perceived systematic risk formed on the basis of falling inflation. Because interest rates are leading to inflation, if inflation starts to go down, it is assumed that interest rates will follow. But we've just seen interest rates go up. So if we've just seen inflation go up, so if inflation continues upwards from here, it is assumed that interest rates will move upwards here, and that trajectory that has formulated the basis of that entire move up for the stock market and cryptocurrency will crumble, and the risk in the market will increase and asset prices will fall. That will need to be required. We'll need to see a second wave of interest rate hikes to see new lows, okay? To see new lows. We're going to get into more of the 4-year cycle in tomorrow's video. We might do a whole video on the 4-year cycle and more discussing absolutely everything, but we'll leave it there for today. Let's go ahead and talk about the short-term time frame. So as you can see, guys, interesting stuff, and I've been telling you, copy this chart down, copy this chart down, copy this chart down. As you can see, this is our horizontal range. Okay, with a horizontal range, we had a range high, we had a range low. Okay, perfect. For the price to be bullish, we need to break above. Okay, the downtrending daily resistance represented as black line. We talked about it on the daily already. Okay, for us to even see that, we obviously need to clear through these range highs, okay, particularly the 27.8k level. So we know now we need to clear 27.8k to break above 28,000. But what we have seen is the prices corrected quite aggressively. If you've been watching the channel and watched yesterday's video, you would know that we said a loss of 26.3 thousand being the range low. A range low loss of 26.3 thousand will result in $26,000 if lost. We saw a correction to $26,000. In fact, we saw a correction under $26,000. We went all the way down to 25.37. The question is now, is the current candle a rejection candle from this area, which was once support and now resistance, or will it actually move back upwards? Now, here is the thing. From a structural level, we are bearish. We moved from range bearish, we moved from bearish, and now we are in strong bearish. If the weekly candle closes within 21 hours underneath the 200 moving average, we're going to get a confirmation of a bearish trend. But from a structural perspective, we are not weekly bearish until 25.2k is lost, but it is this area where we have a daily bearish trend, we have a weekly bearish trend, we are more bearish than we are bullish. The probabilities do push us downwards. So let's talk about this. If the price is able to get back into this range, that is when we flip short-term bullish, okay? I would not be looking short-term bullish on the smaller time frame, not the macro, smaller time frame, unless the price is able to re-enter the consolidation range we had over here. Remember, if we enter from the bottom side up through the range low, okay, we enter a range bullish trend. If we enter from a top side down, okay, we enter a range bearish trend, like we saw over here, like we saw over here, like we saw again over here. So if we want to see the price start to make its way up, we need to see the price break back above 26.3k, the exact point of which when we lost, we saw that correction. So we want to see the strength be pulled back in favor of the bulls on the short term. We need to see that exact opposite move occur. We need to see the price break above 26.3. Alternatively, we do have a downtrending resistance here. Depending on the time of the break, we could see a consolidation and break up here. Either way, we're going to have to see 26.3 break. On the smaller time frame, we'll wrap up today's video. It's going a bit long. On the smaller time frame, it doesn't look ideal over here, guys. As you can see, we are now consolidating underneath this resistance. Again, not an incredibly good look. We can see that the market OB has printed a red dot indicating momentum is starting to dry up. So we did have a bounce from 25.3. It wasn't a very good bounce. We saw a rejection at 26, a huge liquidation back down. We saw the price climb back up, but it is now losing momentum, okay? A nice strong red dot. Furthermore, if we go down to a 15-minute chart, we can see that the Marcus OB and the RSI now are suggesting we've had short-term momentum shifts. So these short-term momentum shifts have the possibility to bring the price lower, and I'll be watching an uptrend such as this uptrending support line here. Be watching something like that to see if a breakdown occurs. You can see we do have a decent amount of liquidity right over here with support at around 25,600, a loss of 25,600. Puts us into this lower volume range, and we can expect a continuation down. Okay, guys, if we move toward the upside again before anything occurs, we 100% need to see the price get above and hold above 26,000. I would not be looking for massive positions on longs right now. I would not be looking for massive positions on shorts right now. As you know, we profited massively in the last few days. Take some time, keep the money in your pocket, enjoy the profits, and wait for the news events. Wait for the market to make a definitive move. Wait for the market to develop some structure after what was one of the most aggressive liquidations we've seen for quite some time, and then react. Thanks for watching. I hope you enjoyed it. Catch you tomorrow for a full analysis on the 4-year cycle and higher time frame price action. Cheers.